It would be an understatement to say that housing markets aren't especially pleased by the rising interest rates that have dominated 2022. And so, as such, with the most aggressive monetary tightening in decades presently underway, it's not a great environment for housing markets. And the Canadian housing market is arguably more adversely affected than most. Not only do rising rates make mortgages and homes more expensive, and by the way, the Bank of Canada just raised rates another 75 basis points as I record this, adding to quite significant tightening earlier, with more likely to come. But Canadian housing affordability, crucially, was already quite poor even before rates started to rise, and in fact wasn't great even before home prices boomed over the first few years of the pandemic. And so now we are seeing clear evidence of weakness in the Canadian housing market. Home sales have fallen significantly. Home prices are now in decline across a fairly wide range of jurisdictions, and it seems reasonable to expect some further movement in both of those variables. We are of the view that home prices could fall peak to trough on the order of 20 or 25%, which is quite a significant drawdown and will result in some financial suffering for those who entered the market most recently. Of course, that still leaves home prices somewhat higher than they were before the pandemic. We shouldn't underestimate some positive forces helping to perhaps stabilize the market before too long in the form of strong rates of immigration, in terms of housing supply that has just fundamentally struggled to keep up with demand, perhaps in part for zoning reasons. And interest rates aren't going to rise forever. In fact, we think we're already at a level that's probably higher than you should expect over the long run. And so there will be a reversal at some point in time. And so the bottom line is that Canadian housing should be a significant drag on the Canadian economy in the short run. We think the systemic risks are fairly well contained. There aren't too many parallels to the global financial crisis, but it is now a source of weakness, whereas for a very long time indeed, it had been a source of strength.